This is an important presentation we're making today. Obviously, tax law updates are always important, but this year, because of the big, beautiful bill, there's more changes that are out there than ever. And what we're going to do is take you through the next half hour through many of the changes. In fact, these changes are so prevalent that we don't even have all of the information yet. And because we don't have all of the information, one of the things we'll do is another separate webinar specifically on the ramifications of the big, beautiful bill. But what we want to do is today get you as much information we can, not just with regard to that, but other tax law updates that will be in place for tax year 2025. Before I go any further, Justin, can you hear me okay?
Yes.
Perfect. Let's go ahead and get going then, everyone. I apologize for the technical issues that we had a little bit earlier, but we'll still try to make this worth your while by giving you some very up-to-date information. And we're going to start with what we're going to cover today. What we're going to cover is the one big, beautiful bill and the tax provisions that go into effect for this year. On top of that, we'll talk about federal form changes, specifically to Form 1040, the Schedule 1A, and Form 5695. We're going to talk about updated tax inflation adjustments just like we do every year. We'll make reference to the updates regarding the Form 1099-DA as well as Form 1099-K. And then we're going to finish up with a change to the IRS refund process for taxpayers who are requesting a check. It's different than it's been in the past, and it's important so when you're working with your tax-paying clients, they understand the ramifications should they want a paper check. So let's get into it. We're going to start with the one big, beautiful bill, the OB3, as it's oftentimes referred to. Here are some provisions that are going to go into effect with the passing of this legislation. First of all, the child tax credit. The credit increased to $2,200. And the refundable portion will remain at $1,700 for tax year 2025. On top of that, additional increase for the standard deduction. Legislation increased the standard deductions by the following amounts. It was $1,500 for married filing jointly. That's quite a bit. It's also $1,125 for head of household and $750 for all other filing statuses. So please remember, these were increases to the amounts that were already in place. So what does that mean? With these additional amounts, the standard deductions for tax year 2025 will be $31,500 for a married couple filing jointly, $23,625 for a head of household, and $15,750 for single and married filing separately. Next up, with regard to provisions, 4 additional deductions are now going to be in play. And with regard to that, they are tip income, overtime pay, interest on car loans, and senior deductions. You may have heard about some of these deductions or what they potentially could mean. We're going to give you some additional insight with regard to these. But one thing's for sure, with regard to all 4 of these, there's some important highlights that you need to know. First of all, these deductions are taken after adjusted gross income in the same category as qualified business income deduction and standard deductions. On top of that, these deductions will be calculated on the new Schedule 1A, which we're going to talk about a little bit later in detail. The total of these 4 deductions will transfer from that Schedule 1A to the new line 13B on the Form 1040. And it is now known, just in the last week or so, that this qualified overtime pay and tip income will be reported to individuals either on the W-2 or on a separate statement. One of the things that people probably are asking is, how am I going to be able to report this? Either the employer is going to help out by reporting it on the W-2, or there'll be a separate statement that's sent out. So let's take these one at a time. We'll start with tip income deduction. First of all, you will need to educate your client that all tip income may not be non-taxable. It is a deduction and only applies to certain occupations. So what are we talking about? The deduction is up to $25,000 for qualified tip income earned during 2025. On top of that, individuals must have earned tip income in an occupation that traditionally receives these tips before the beginning of 2025. That's important to note because sometimes people are thinking about tips that might be in a non-traditional position. Qualified tip income also can include tips received by self-employed individuals, and their list of occupations will be provided by the Treasury Department. So you can get that information when the Treasury Department sends it out. Deduction phases out once the adjusted gross income reaches $150,000 or $300,000 for married filing jointly, and the tip income is still subject to Social Security and Medicare taxes. finally, for tax year 2025, the occupational will not need to be entered into the Schedule 1A. Now, I have an important note here, and that is that the IRS has provided guidance. And this is by a new IRS Notice 2025-69 on how taxpayers may receive their tip income information from their employer, as well as other amounts that may be included in determining their qualified tip income for tax year 2025. Now, I'm going to go ahead and see if we can take a look at this new notice. I'm going to see if I can pop into this. Just one moment. No, I'm afraid I don't have that one. I had that notice up a little bit earlier. I apologize for not having it at this point. But if you go ahead and Google IRS Notice 2025-69, you'll be able to find specific instructions on how to go ahead with the tip income deduction. Now, we're going to make reference to this notice on a couple of different occasions because it's the same instructions that will be in place as it pertains to overtime as well. So, continuing with tip income deductions, here is how taxpayers will determine their qualified tip income for 2025. It's important to note that follow this process. If the employer reports their qualified tip income on the W-2 box 14, then the taxpayer will use that amount. On the other hand, if there's no amount reported on the W-2 box 14, then the taxpayer will use the total amount of Social Security tips reported on Form W-2 box 7. Additionally, if the employee filed a Form 4070, now you're not generally going to find an employee that has done that, or in other words, the taxpayer that you have, but that is the employee's report of tips to the employer. If they happen to fill those out with their employers, then they will include their total tips reported on all Forms 4070. And when I say all forms, if they had multiple employers and they did this on multiple occasions, you'd use the accrual of all Form 4070s. Again, this is something we see as an exception. Usually the employee is going to wait to get the report from the employer. Now, the taxpayer may also include any amount listed on line 4 of Form 4137, which is the Social Security and Medicare tax on unreported tip income. Now, an important note, we were just talking about this before, IRS Notice 2025-69 also includes information regarding how tip income can be determined for self-employment individuals and for employees that work for a specified trade or business. Now, let's talk about overtime pay deduction. Again, this is new with the great big beautiful bill, and it's important to educate your clients that not all overtime pay is non-taxable. What do we mean by that? Up to $12,500 or $25,000 for married filing jointly of their qualified overtime pay earned during tax year 2025 will be non-taxable, and it is taken as a deduction on the return. Now, qualified overtime pay is additional pay over the individual's regular pay. And the IRS refers to this as an overtime premium amount when it's being paid at time and a half. It's important to note that that is what's considered to be premium by the IRS. For those being paid double time, only half of the additional pay qualifies. Deduction phases out once the adjusted gross income reaches $150,000 or $300,000 for married filing jointly. And all overtime pay is still subject to Social Security and Medicare taxes. Now, an important note, as we made reference to before, the IRS Notice 2025-69 on how taxpayers may receive their overtime information from their employer, as well as how they may have to calculate the amount for their qualified overtime pay, can be found in this notice. So let's continue by taking a look at how it's going to look when you're working with people. In most instances, the taxpayer will determine their qualified overtime pay as follows. If an amount is reported on Form W-2, box 14, then the employee will use the amount as their qualified overtime pay. That's that simple. It was already on the W-2. Now, if the overtime pay information is given in a separate statement, then the employee can determine their qualified overtime pay as follows. First, if the overtime premium is reported separately on the statement and the employee was paid time and a half, then they can use the overtime premium amount from the statement. In other words, if they were being paid time and a half, that's the number that they would use. On the other hand, if they were paid double time, then they'll need to multiply the separate amount by 50%. Because again, the part that's in play here is the time and a half, not the double time. So if somebody is taking double time or has been paid double time, as far as the overtime is concerned, the only part that can be deducted is 50% of the double time. Now, if only the total overtime is reported, then the employer should determine the qualified overtime as follows. Paid time and a half, take 1/3 of the total overtime. Paid double time, take 1/4 of the total overtime. Now, an important note, that guess what? We're making reference again to notice 2025-69 because it gives additional guidance. Google it, take a look at it, keep it around. It's a good reference. Tax year 2025, notice 69 gives additional guidance on all the situations. And as an example, the employee didn't receive a statement from the employer that covers all of tax year 2025. How do you cover that? Or how do you handle that? That's all found in that notice. Now, let's talk about car loan interest and senior deductions, the other two of the four that we mentioned before as part of being of the OB3. Qualified car loan interest deduction. First of all, the deduction of up to $10,000 on qualified car loan interest paid during the year. The deduction phases out once the adjusted gross income reaches $100,000 or $200,000 for married filing jointly, and it's applicable to cars, vans, trucks, and motorcycles. Vehicle or motorcycle must be new, have been assembled in the United States, and be for personal use. The VIN number is required to be entered on Schedule 1A. That last one's an important note right there. With regard to senior deductions, the deduction of $6,000 for taxpayers 65 years old or older, and the deduction begins to phase out when the adjusted gross income reaches $75,000 or $150,000 for married filing jointly, and both taxpayer and spouse are eligible for the deduction. Additional provisions. First of all, itemized deduction for taxes. The limit was raised to $40,000. The limit will decrease to $10,000 once the taxpayer's AGI, or adjusted gross income, reaches $500,000. The limit and adjusted gross income phase out will be increased for inflation each year, and it's applicable for 2025 through 2029. The adoption credit now will be for years 2025 through 2028. Up to $5,000 of the adoption credit will be refundable. And the bonus depreciation that's out there, 100% bonus depreciation is available for qualified property acquired after January 19th of 2025. And we'll finish up with the additional provisions with clean vehicle credits. Please note that new clean vehicle and used clean vehicle credits, as well as commercial clean vehicle credits, only apply to qualified vehicles that were purchased before October 1st of 2025. You notice that a lot of people tried to make those types of purchases right before October. This was the reason why. These clean vehicle credits are no longer eligible or available for folks. Okay? What I want to finish up with the OB3 is we're going to talk about Trump accounts. You may have heard about this. This is a very important piece of this legislation. And here are some details with regard to it. First of all, children under the age of 18 are eligible to have a tax advantage savings account set up for them by the Treasury Department beginning in 2026. For children born in 2025 all the way through 2028, the federal government will contribute $1,000 in the first year to the account if the parent elects to have this done. Parents of the child can also contribute up to $5,000 a year, and no distributions may be taken until the child reaches the age of 18. Now, distributions may only be used for higher education expenses, certain prudential expenses, certain small business expenses, or first-time home buyer expenses. Again, after the child has reached the age of 18. And once a child does reach the age of 18 and going forward, the account is treated like a regular IRA account. Please note the details on how the account is assessed by the parent and or child is still being determined. So this is really important, but it's something that's going to start really with next year. And because of that, there's still information that's being put together. Let's continue on real quick with some other information as it pertains to Trump accounts. What will occur with the tax year 2025 federal return? How does it impact people that are interested in starting a Trump account? A new election form is being created for the parent to make the election to have a Trump account set up for their qualified child. Form will be filed with the parent's tax year 2025 federal return. So once this information is available, it will actually be filed with the return of the parents. For children born in 2025, a parent must elect to have the $1,000 contributed to the account by the federal government and that will take place in the summer of 2026. What we mean is the accounts will actually be created in the following next summer. Okay, the account and the $1,000 contribution will be created during that time. So expect to happen second quarter of next year. Look for further details to come out from the Treasury Department in the future. This is something that's very important to this particular administration, but some of the details are still being worked out. And as we have more information, we'll be able to share it with you. This is what we know as of today. That finishes up our piece on the OB3, or the big, beautiful bill. What we do have is other things that are going to take place for this upcoming year as far as tax law updates are concerned. And it starts with federal form changes. We'll start with Form 1040 and the changes. There are some changes due to tax legislation, and they are the adding of the line 13B for the total of the new Schedule 1A, which we referenced a little bit before. On top of that, line 30, which is refundable portion of the adoption credit. On top of that, there are changes not related to new tax legislation, and they will include at the top of the form, the following have been added: a checkbox for deceased or DOD for the taxpayer and spouse, a checkbox for combat zone, and a checkbox for returns filed pursuant to Section 301-9100-2. Other changes: the following checkboxes have been added to the EITC eligibility purposes. First of all, in the dependent section on page 1, if they live with you for more than half the year and in the United States, exceptions to age requirement for full-time students and permanently disabled folks, taxpayers separate from spouse filing separate return and claiming EITC. Also, in the name area, checkbox has been added to declare that the taxpayer's main home was in the United States for more than half a year. So remember, these checkboxes have been added specifically for the EITC eligibility purposes. Continue with other changes to the Form 1040, the basic return. The following has been added to replace the writing descriptions and/or amounts. Other earned income type and amount field has been added to line 1H. 2 new line 3C checkboxes for child's dividend income when it's included on the dividend lines 3A and 3B. Checkboxes have been added to indicate the rollover and QCD PSO for IRAs and pension distributions. And a new line 6D checkbox was added for a taxpayer declaring MFS while living apart from the spouse for the entire year. And of course, this was for Social Security benefit purposes. 2 new checkboxes were also added to line 7B, one for when the Schedule D is not required to be attached, and one for when the Schedule D includes the child's capital gain or loss. Other things on the 1040 include, due to the additions of the EITC checkboxes, the dependent section, the following are moved to page 2, line 12. Because of these new checkboxes, some things got moved to line 12 of the second page. They include checkboxes for someone claiming taxpayer or spouse as a dependent, a checkbox for a spouse itemizing on a separate return, checkbox for a taxpayer claiming a dual status alien, a checkbox for a taxpayer spouse age and blind related checkboxes as well. Okay. Please note that there was also an added new line between line 26 and 27 for entering a former spouse's Social Security number if the taxpayer made an estimated payments with their former spouse. Finally, the form itself expanded the earned income tax credit, which is line 27, to include a checkbox for clergy and taxpayers that don't want to claim EITC. We'll finish up with, they also added a checkbox on line 28 for taxpayers not wanting to claim additional CTC. Next up, we want to talk about Schedule 1A, which is going to be new, as well as Form 5695. So Schedule 1A, which we made reference to before, as it came into play with the big beautiful bill, some additional deductions that are available. This is the new schedule to show the full calculations of the 4 new deductions that were added with the OB3. We talked about them just a little bit ago. It is a 2-page schedule, and it's broken into 6 parts. So please note that Part 1 will be the calculation of modified adjusted gross income. Part 2 will be the calculation of qualified tip deductions. Part 3 will be the calculation of qualified overtime compensation deduction. Part 4 will be the qualified car loan interest deduction. Part 5, enhanced deduction for seniors. And then Part 6 will be simply a couple of lines into the total additional deductions. So again, Schedule 1A, which is going to be important, and that does fill into the 1040, will have 6 separate parts that you'll work through depending on what the needs of your particular taxpayer or the claims of the particular taxpayer you're working with. Okay. With regard to Form 5695, which is the residential energy credit, please note that for 2025, the IRS will now require that the qualified manufacturer's identification number be entered for the following qualified energy efficiency improvements in Part 2 of the form. What we mean by that is all of these different things as it pertains to exterior doors, windows and skylights, central air conditioners, natural gas, propane, oil, you can read the list, natural gas, enabling property, natural gas heat pumps, electric or natural gas heat pump or water heater, and biomass stove boiler. In all instances, the IRS will now require that the qualified manufacturer's identification number be included when making this claim. Next up, we want to talk about updated tax inflation adjustments. It's funny because in the other years, this might be something we actually go first, might be the first thing we talk about, but because of the other bills that are out there, or the new legislation, I should say, this is something that's still very important, though. We should know what the updated tax inflation adjustments are. The maximum earned income tax credit will be $8,046 for 3 children or more, $7,152 for 2 children, $4,328 for 1, and $649 for taxpayers with no qualifying children. On top of that, the mileage for the upcoming year will be as follows. For business, it will be 70 cents per mile, medical and moving for 21 cents per mile, and for charitable purposes, 14 cents per mile. Next, we want to talk about updates regarding Form 1099-DA. So what is that? That's the digital asset proceeds from broker transactions. More and more, these are going to be things that you're going to see from your tax-paying clients. Beginning in January of 2026, taxpayers who had digital asset transactions, which includes cryptocurrency, will receive a Form 1099-DA for all digital asset sales that took place through a broker during 2025. The details on this Form 1099-DA are as follows. Individuals receiving 1099-DA must report the transaction on their federal return, just like a sale of a stock or any other capital asset. So when they get this, they're going to not throw it away. They want to bring it to you to make sure that it can be reported on the individual's return. For tax year 2025, a broker is not required to report the basis of the digital asset on the Form 1099-DA. Therefore, in most instances, the individual will have to determine the basis based on the records that they kept. So because the broker doesn't need to report it, it'll be the responsibility of the taxpaying client, if that's indeed who is going to be receiving a digital asset proceeds. Okay. A broker is required to include the proceeds of a sale, date of the sale, number of units sold, name of a digital asset sold, and code for digital asset on Form 1099-DA. So they do have to provide quite a bit of information with regard to the sale. Likewise, updates regarding 1099-K, and this is payment card and third-party network transactions. You may see even more of these types of things as well. The OB3 bill included a provision that changed the reporting requirements for third-party payment networks. These are things like Venmo, PayPal, etc. To issue a 1099-K back to the way it was before the American Rescue Plan Act of 2021 went into effect. So what's happening is that with this new legislation, they're kind of turning the hands of time back to the old way that things were being done. Therefore, 1099-K is not required to be issued unless the sold goods or received income from the services total $20,000 or more and had more than 200 transactions during 2025. At this point, no one is sure how third-party payment networks will respond to the rolling back of the reporting requirement. You can imagine it's going to be hard when people have kind of changed their way of doing things. They may issue a lower filing requirement since they already have set up their payments for this. They may just keep doing the way they have been, or they may revert to only creating a 1099-K based on the above thresholds. We'll have to wait and see how people are going to report on those types of things since this is a rollback. Okay. The last thing we want to talk about is change the IRS refund process for taxpayers requesting a check. I don't think it's any secret that the IRS would love to process all refunds by way of electronic distribution. However, there are still people that do want to request a paper check. And when that's the case, some changes to the IRS paper refund check process are now in play. First of all, regarding individual returns, if a taxpayer does not indicate that they want the refund to be direct deposited, the IRS will be doing the following. So if they file a return and you know what, they don't say that they want to have it electronically distributed to them, the refund will be held for 6 weeks. The IRS wants to hold that refund. Why? Because the taxpayers will receive a notice requesting bank information so the refund can be direct deposited to the bank account. They will enter the information on an IRS online account. So what's happening is the IRS wants to send out notice that, you know what, before we do this, we're going to hold this for 6 weeks, and we much prefer that you give us some banking information and we can make an electronic distribution for you. Now, a taxpayer may ask for a waiver from having the refund direct deposited, and if a taxpayer does not respond to the aforementioned notice, a check will be issued for the refund after 6 weeks. An alert will be included in the acknowledgement of the e-file if any of those that were e-filed returns. This change is being made due to a presidential executive order that was issued last March. So this is something that literally the IRS very much wants people to get their money distributed electronically whenever possible. And let's be straightforward about this. 6 weeks is a long time for somebody to wait for a paper check, but that's what they're going to have to do should they want to go ahead and have their monies received by way of paper check. Now, that brings us to the end of everything that we covered in this particular presentation. We did go through the OB3 in great detail, as well as updates to Form 1040. We talked about some of the updates and changes that are going to be made to some of the additional things, such as whether or not you want to get a paper check, as well as some of the Form 1099-DA and 1099-K.